Good morning, traders. It is Monday, the 14th of March, 2016. It's 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. A reminder that the U.S. has moved to daylight saving time starting yesterday. There's going to be a larger time difference, actually a smaller time difference between the U.S. and Europe for the next 2 weeks. A quick look at the overall sentiment overnight. Oil down 2.5% on news from Iran. Generally, the euro's down slightly. The S&P's down just slightly. Gold is down also just under 0.07%. That's down about $1. U.S. Treasuries are flat. The notes are flat. The bonds are up slightly. The dollar's up slightly. The Bund is up slightly, and the Euro stocks and the DAX are fairly strong this morning, along with the Asian markets. The Nikkei up 1.74, Shanghai up 1.76, and the HSI up 1.17. So the overall sentiment in the market, although energies are weak, a couple things came out overnight that have pushed the market around a little bit, but overall the range is pretty tight. China's industrial production showed 5.4% versus 5.6. That was a miss. Retail sales also disappointed at 10.2 versus 10.8. Both numbers out of China were disappointing to the market overnight, but it still finished stronger. Iran announced that it won't freeze its oil production. It's not going to freeze its oil production. The oil minister says that they should be left alone, that Iran should be left alone, and is not going to be a part of the freeze until they double their pre-sanctions production, which is at about 4 million barrels per day. Until they reach 4 million barrels per day, they're not going to consider any freeze in oil production, and that's where you're getting your oil pullback from. We're expecting some important announcements this week. The Bank of Japan today regarding quantitative easing. The Fed's on Wednesday, the Swiss National Bank, and the Bank of England on Thursday. So expecting this, with that being spread around like that, I expect this week to be fairly busy. The overall sentiment of the market is flat, is mixed, really. Again, energy's down. Gold is also slightly down. So the overall market stance is mixed overnight. And so we have a bit of a choppy range. Given that it's a Monday, let's look at what we have for the week. Tomorrow we have, well, let's look at what we have today first. That would make sense. Today, the calendar is pretty clear for the U.S. markets. I see, as far as other events, I see ECB Speaker Villeroy at 8:30 Central, 9:30 Eastern, right at the cash open. Seeing 11 o'clock, Villeroy speaking again, 11 Central, 12 Eastern, and then other than that, it's pretty clear calendar. There's not much in terms of economic events to push this market around right now. But if we look at the week, tomorrow we're looking for European employment, U.S. retail sales, PPI, core, the Empire number, and business inventories. Wednesday, UK ILO unemployment, U.S. rate decision, CPI, housing starts, building permits, and industrial production. So Wednesday's packed. Thursday, the Swiss National Bank's deposit rate decision. The Eurozone has CPI, trade balance, construction output, BOE's deposit rate, U.S. current account rate, and Philly Fed, all on Thursday. And on Friday, we have German PPI, and in the U.S., you have University of Michigan and Fed's Dudley, Rosengren, and Bullard. Again, other than today, the rest of the week looks fairly packed with data that could force the market to revalue itself, giving us some volatility. The next thing I want to do here is go over what was expected for Friday. This is from the Friday Trader Bite. Hopefully you can see this very clearly. What we had on Friday is the expectation was for the market to stay in the gap here. It was at 97.50 during the Trader Bite. And the expectation is for it to pull back slightly somewhere near the high of that prior day at 95.50. But the overall expectation, the hypo one expectation is for it to push towards the mid of the gap zone and to also close the naked point of control from the 22nd of December. That's quite a while back. So the naked point of control is at 2008 and a quarter, and the gap zone above was at 1075. Those were the targets for hypo 1 on Friday. Again, you can always see these on the YouTube channel, on my YouTube channel. Just search for it on YouTube and you'll find it. You can always go back and look at what was said. So here's what actually happened on Friday. Let's turn off these indicators here. Here's what actually happened on Friday. We pushed into the gap zone. The market opened slightly lower than during the trader bite, just a couple ticks, and it really had no force in it to the downside. The opening swing was fairly tight, 95.75 to 99.50. It had a small pullback, could not breach the prior day's range. My expectation is for it to push slightly into the prior day's range, find its buyers, and push up. It did not do that. It basically pulled back to the prior day's high minus a tick, and the prior day's high at 95.50, the OS low at 95.75, and it just pushed up directly into this naked point of control that we discussed here a moment ago. Pull back to the mid, and then continues higher, and then finally breaches the mid of the gap zone. I think there was some confusion there between a gap zone mid and a gap mid, and I just want to clarify that here in a moment. A gap mid is the difference in price between the open of today and the gap close, which is at 2027 and a quarter. That basically brings us into that day's range. That day is the last day of the year, the 31st of December 2015. The gap zone, however, is basically an area that we did not trade into at all. It is an unexplored area, and you can see here from the 31st, the low was 21 and a quarter, and then the highest high since then has been 2005 and a quarter. That creates a gap zone. This is basically an unauctioned, unexplored area that we call the gap zone, and I'm looking for the mid of that. On top of that, I'll be looking for the mid of the gap close, which is slightly higher, 27 and a quarter. So those are two different things. I track the gap zone because it acts like, for those of you who are familiar with market profile, a gap zone acts a lot like single prints. It is essentially a rejected sequence of prices. And generally, I do not fade that area. I don't look to trade against a market in a gap zone because there's nothing there to refer to. However, we did hit the a key long-term price at 2004 and a quarter, which is also today's overnight low. We did push into the naked point of control, and we did push into the gap zone mid. Friday accomplished its purpose pretty well. If you look closely, though, Friday's profile does not show us. Friday's profile behaved a lot like a trend day profile. It did not show us that it had found its sellers yet. If you look at Friday's high, A tremendous amount of volume went off at the high there. That is just an awful, awful high. It's a very, very weak high. There's no, we don't see any balance. We don't see the market shutting off except at the low here. We've got three distributions on Friday, again with a weak high. In my opinion, this is not done to the upside. We're trading 2005.50. The overnight market really didn't do much despite the poor numbers out of China. It's still not auctioning properly in this price, seeing a lot of turbulence. And I want to remind you again that this week is expiration week. Friday is quad witching Friday. So there's a lot that goes on during this time. Generally, volume is higher. And volume indications and volume indicators are skewed from last Thursday, which was rollover day, through expiration Friday. It all clears out at 8:30 a.m. Chicago time on Friday morning once the product expires, the old product expires. But until then, indications of volume have a bit of a skew in them. So that's where we left it on Friday. There was really no consensus on price, a very boxy profile. The market is battling all of these prices all the way through. So there's still a lot of commitment on both the sellers and the buyers in here, operating aggressively into the rise of the market. So here's the overnight session. Very bulky, very non-committal type of overnight session. We had some pretty brief pops on the European Open, but overall the market's drifting lower. It was more balanced earlier, and now it has shifted so that it has created a lot of volume down below. The volume overall in the overnight session is very poor, 142,000, as opposed to what we've recently had, which is around 200,000 contracts in the overnight session. It's showing that there's really no commitment here by those participants trading overnight, despite the fact that the DAX and the Euro stocks are stronger this morning. The market, it continues to drift down, giving us a very tough a very tough stance to predict what the likely outcome is for today. So for now, we just look at where we are. We are opening in range, in value. The value area is not what I would call a normal valid value area. We're against the point of control of Friday. The overnight point of control is in line with Friday's point of control. You can see it's 2007. The point of control is at 2007 from Friday. So the market is stable and is balancing. This is likely to be a fairly choppy open. I expect the market to open. I expect it to shift up, push through, and I expect that the market will likely have a fairly wide and choppy morning. Overall, the skew is still to the upside. I do not believe the market is finished on the downside. So my expectation is that it's likely to continue higher if it does. But today is expected to be an inside day with a slight skew upwards. That is my hypo one. It's 8:15. I'm going to leave you with that thought. Hopefully this week is a great week for you. Just sit tight, let the market decide what it wants to do early on, and then commit to trades that show you an edge. And you have to define that edge. Even if you're following someone else's system or method or approach, you still have to define your own edge because you have to trade it. You have to commit to it. Otherwise, you're going to end up doing a lot of homework, not triggering your trades when you're supposed to. And then once you do, you don't allow your trades any room to maneuver, and you end up closing them for ticks or scratches or small losses. You just need to do your own deciding and gather the information you need to come up with your own plan and then trade it. It's the only way to go. Good luck.